Good morning et bienvenue. I'm Joanne Jobin, your Vid Media host, and welcome to another Vid Town Hall Forum. Today, I'm excited to be here with Radisson Mining. Joining us this morning is newly appointed CEO Matt Manson and CFO Hubert Perrin-Bouchard. Matt will provide an update on the company and an outlook for the remainder of 2024. Now, after the presentation, I will moderate the submitted questions. So please do submit your questions to the Q&A tab located at the top of your screens. I will then publish your questions and you will be able to vote them up or down in terms of what you deem most important. Without further ado, I now turn the meeting over to Matt. Matt?
Thanks, Joanne. Welcome everybody to this Radisson Town Hall. So this is going to be about 30 minutes, maybe 35, before we hand it over to questions. As Joanne said, I'm the new guy here. I've been in the job about 3 weeks. So Radisson is a company that's been around for many years, working on the O'Brien project in the Abitibi region of Quebec. So many of you will know this story, and this will be a reintroduction to it maybe. For those of you that are new, I invite you to see this through my eyes as the new guy coming in, seeing the potential here with excitement to do something special with this company and with this project. And by way of background, so I'm a professional geologist, Scottish originally, as you can probably tell. I've been in Canada since the late 80s. My career has been one of taking greenfield projects through the whole development process and ending up in construction and operations. So I'm not here to have a fun time drilling holes for the next 10 years. My job really is to see the mine at the end of that process. I was a junior guy with Albar, which then became Harry Winston, which then became Dominion Diamond in the diamond business, building the Diavik mine with Rio Tinto in the early 2000s. I then went to Agnico Eagle to run a small subsidiary company they had that had diamond assets, which became one of the predecessor companies for Stornoway Diamonds, which built the Renard mine in the James Bay area of Quebec, an $800 million build. That was the last major mining project built in Quebec. So I've got that that pedigree of working in the province. I've spent the last 5 years developing the Valentine project in Newfoundland and Labrador gold, which was recently acquired by Calibre Mining, and Calibre stock has done very well, and that's going to be a big success on that basis. So here I am at Radisson, and I want to take you through the geology of this deposit. Again, a bit of a reintroduction, but again, inviting you to see this through my eyes and where the potential is, and then guide you to what I think the future holds here. So the usual forward-looking statement. So for those of you who don't know O'Brien was a mine that ran for about 30 years, up until the late 50s, produced upwards of 600,000 ounces. It was known to be Quebec's highest grade miner, 15 grams per ton produced, which back in the day is quite significant, half an ounce. Those samples you're seeing there are in the Royal Ontario Museum in Toronto. So there's lots of that kind of stuff at the O'Brien project, right? Really spectacular, visible gold, high grade gold. So, best place to develop a new mine is where the old mines are, frankly. That's especially true in the Abitibi and in Quebec. So here's the thesis for Radisson, and again, this is my coming in perspective. After a lot of work, a lot of drilling by the team at Radisson over the last several years, there's about 1 million ounces of resources here now, high grade, 8 to 10 grams per ton, double-digit grades here. The Abitibi, as I'm about to show you, is the best address for gold mining in the world. Everything is there. You've got head frames on the horizon. You've got people, you've got major towns, you've got mining services, you've got existing infrastructure, you've got a very supportive regulatory regime, predictable, stable regulatory regime, predictable path to getting mines into production. supportive communities and people. Immediately adjacent to Radisson are 5 existing active mines with mills. So I'm going to talk to you, I'm going to tell you a story here about how we see the O'Brien ore going to somebody else's mill. We don't see this necessarily as a standalone project with a new mill and a new tailings. It may go that way, but we think there's opportunity here to do something a little bit clever, a little bit more efficient, with an eye to the value for everybody involved. And we'll talk about that. And that's just given by the proximity of all this other infrastructure around us. Very recently, there's been a refresh board and team. And I'm going to show you some of the new names that have come on board. And we're in the middle here of a 35,000 meter drill program, which is going to be delivering exploration results on a continuous basis through the end of this year into next year. This is still very much an exploration project at O'Brien. We don't have economic studies. We don't have a permitting a process underway for a mine. This is not a development story yet. This is an exploration story, and that exploration is very important to us. But the point of the exploration is because we think we've crossed the line, and we think we see the mine here, and it's with a point of heading that way. That's the objective. Okay, so those new names. This is the board that's now being constituted as of the last pieces were put in place of this new board just last week. So I joined July 1st. Pierre Baudouin has been on the board for about 3 years now. He's now come on as the board chairperson, which is terrific. Pierre was the chief operating officer of Detour and was responsible for the construction of the Detour Lake gold mine on path to be Canada's biggest gold mine. Michael Gentile, many of you will know Michael. He's a significant resource investor. He's a significant shareholder of Radisson on our board. Jeff Swinoga, again, many of you know Jeff. He's got a long history in the Canadian mining industry, formerly of Hud Bay, currently the CEO of Exploits Gold in Newfoundland. I knew Jeff when we were working alongside each other in Newfoundland. Cindy Valence and Lee Chenard have just joined the board recently as well. Cindy's got a background in CSR, community engagement, ESG principles of mining, very well connected in Quebec. Lee's history of technical profile, Barrick, and then most recently IM Gold. And then Peter McPhail, the newest appointee, he came on last week. Peter had a long career as Chief Operating Officer of Orico, Northgate, and in Alamos. I know Peter from, we served together on the board of Marathon Gold. So this is a crackerjack board. I mean, this is a board that's got a lot of experience. There's about 9 major mines that have been built by the participants of that board. Mines in the region that we are currently proposing to explore and develop on the Orion project. So this is as good a board as a company of our size can expect to get, and I commend these names to you. Okay, so let's get into the details of this. So this is where we are. We're on the Cadillac Larder Lake Break, which is one of the main gold conduits within the Abitibi. This slide is really to show you the address. So we've got the LaRonde mine in Ego, 10 miles drive to the west. We've got the Doyen Westwood complex, 10 minutes drive to the west. We've got Doyen Westwood, 15 minutes to the west. To the east of us in Val d'Or, we've got and Ego Malartic. We've got the Lamac project of El Dorado. We've got Kena with Wesdome, and we have all these other previous mining operations left and right of us and north and south of us. So, you can't get a better address. We've got Rouen-Noranda, about half an hour, 40 minutes drive to the west, and we've got Val d'Or, about half an hour, 40 minutes drive to the east, with all the people and the services in those two communities. So this is as good as it gets for location. And then zeroing in on the actual property and the geological real estate, we have a very good position on that Larder Lake Cadillac break. We've also got this larger land position called New Algar to the south of us, which is now in the Pontiac sediments, where we're doing some greenfield exploration, and we'll talk about that. But the main focus here is on that gold belt, gold break, that the old O'Brien mine is situated on. So you see there at the bottom of that map, the long section and all the other deposits, some of which are currently being mined, like Westwood and LaRonde, and some of which are previous mines. Most recently, Lapa which was a project of about 800,000 ounces that was mined about 100,000 ounces a year up until about 2019, most recently by Agnico Eagle. So O'Brien fits right in here, and you see that how deep some of these projects go as well. I mean, LaRonde is one of the deepest mines now in Canada, and you see that the exploration of O'Brien is really just scratching the surface so far. Okay, so another way to visualize the infrastructure here for this project, and again, you can't get better than this. That's the old O'Brien mine in the foregrounds, where our core shack and our office is currently as well. There's a Hydro-Quebec power line. There's Highway 117, which is the paved highway that connects Rouen and Val d'Or. There's LaRonde on the in the mid-ground there. There's Westwood Diane behind you. You're seeing the Pena shaft here. You're seeing Bousquet. There's head frames left and right. If you turn the camera around the other way, you'd see the evidence of mining going the other way as well. So again, very close to these significant world-class deposits that are around. A little bit about the geology. So, for those of you who know our presentation and have seen this type of thing before, this will be new to you. And I put this in because coming to this project new, there's two things that any mining project have to be a success. The first is a solid resource that's based upon well understood geology. And there's tons of examples of mining projects that have gone all the way to being constructed and then have failed because the ore is not where you expect it to be when you go underground and when you open up the open pit. So it's actually a relatively common situation, unfortunately, in the mining industry. So the first thing you've got to know is, have the geologist got it right? Is the resource well constrained? So I was able to do due diligence on Radisson before I came on, having had the experience of multiple projects in this regard, and I was very happy with what I saw. And one of the benefits that the team at Radisson has had here is the old mine. The old mine was mapped very well. All the galleries were mapped, all the levels were mapped, and the geology is well understood. This is classic Abitibi Pichier group, high-grade narrow vein mineralization adjacent to these large structural breaks. So this is a very understood situation that's supported by all of this historical data. And that allows us then to put together a very good three-dimensional model where all the veins here have been individually wireframed. And that then informs the resource estimate, which is properly constrained by geology. So I don't want to spend too much time in this, but I just want to give the message that this is really important, and getting it right from the start is really important. Everything else that flows from now on is metallurgy, is engineering, is design. But if you don't have this right at the beginning, then you're kind of stuck. So this is good, and I was very happy with what I saw. Okay, so the drilling, 130,000 odd meters of drilling over the last 4 years since 2019. This is still continuing. There you see the old mine workings. This is a long section, and there you see just the density of drilling that's gone on. And the number of high-grade hits that this project delivers. The magenta circles are over 10 grams per ton at mineable widths. And one of the themes that's coming out of this project is this verticality of grade. So if you look at the old mine workings, you see that a lot of the stopes are vertical. There's one big one that's going down there, and about most of the ounces of the old O'Brien mine were actually on that vertical trend that's going down. The veins are quite continuous themselves, east and west, but the grade is focused in these vertical ore grade chutes. And we'll probably work out with times for what's causing that. It's probably the intersection of veins or vein sets. Two planes intersecting create a line, and so that's what these vertical orientations are. But these things can be very, very high grade. And when you look empirically at the data that Radisson has collected over the last few years, you begin to see this verticality of grade developing. And this will be a theme that I'll show you in multiple sections coming forward. This is really important because O'Brien was a success historically because of those super high grades on those vertical ore chutes. The continuity of those vertical ore chutes might be a few tens of meters, but the vertical continuity has been hundreds of meters. The old workings there include a shaft that went down to 1,000 meters. So those high-grade chutes were followed the whole way down. By the way, that shaft is going to play a part in the future of the new mine here, because there's existing infrastructure that deep, but that's an aside for now. And so seeing that verticality of grade is really important, because if we can reproduce that type of mineralized setting, then we've really got a good situation going. And you see these trends that have been defined: trend 0, trend 1, trend 2, trend 3, trend 4. That is the beginning of the definition of these high grade continuous trends going down, defined by grade continuity rather than mineralization continuity, right? So trend 0 and trend 1 is where we're drilling right now. And again, that table on the bottom is designed to communicate to you the success rate, the hit rate of drilling. O'Brien delivers successful intersections on these mineralized zones, very predictably, and that's I think it's about a 75% success rate in actually hitting the zones. And there's a lot of VG, as I showed you, that comes out, and that's where you get the big grades. The ability to hit your ore body with that type of regularity informs the confidence that you have, again, on the resource. And that's a theme I hope is coming through here: the confidence, the quality, the professionalism of all of this. And that's important. Another way to look at this in terms of drill results and grade and these vertical ore zones is this graphic. I'm not going to take you through all the numbers here, but these are the top 20 intersections recently on this area to the east of the Old O'Brien mine, which is where most of the resource is. You're seeing 90, 100 grams over 2-3 meters. This is a project that can spit out these very, very high grade results with good regularity. And again, there's a situation where we've had a high grade hit over about 8 meters, 10 meters, 11 grams over 10 meters. You see how the data is constructed, and you see their intersection of veins, and that's probably what's happening. That's why we're getting these bulked up, high grade, vertically continuous areas. It's these veins that are kind of coalescing into confluence areas, and two planes give you a line. That's probably what's going on. So the resource that was done last year, done by SLR, QP for this is Luke Evans, is a technical report on our website, effective March 23. So it's about 1 million ounces, where half of it roughly is indicated at 10 grams and half of it's inferred at 8 grams. That uses a 4.5 gram bottom cutoff. That was done with $1,600 gold and the expectation of about $200 Canadian per ton mining cost. Those are, we're at $2,400 gold. Most studies these days are using $1,900, $2,000 is going to come quite soon. So this is very conservative parameters here. We're showing a 4.5 gram cutoff. We're also showing a 3 gram cutoff, which is probably what would have been used if this was being redone. That drops the grade on the same data set, but increases the ounces considerably. So that bumps the ounces up to about 1.2, 1.25 million. A lot of flesh in the bones here. That's the message on the resource, and well constrained. The resource growth of this project, that is the history, the 4 most recent technical reports. So that 1 million ounce resource there is after a total of about 300,000 meters of drilling. So that's about 3 ounces per meter of drilling. It's very predictable. The target here, I think, for this company, realistically, is, if given the ground we've got, the continuity we see, and the amount of open target areas, is somewhere between 2 and 3 million ounces at those grades. It's going to take a reasonable amount of drilling to get there, but geologically, I think that's a very reasonable target. And that's not my graphic. That's the graphic of Abitibi and the team that came before me, and I fully concur that 2 million ounces plus with question marks is where this project needs to be considering itself to be going. Couple more long sections just to reiterate some of this technical messaging. That's the resource. Pink is indicated, yellow is inferred on this eastern extension area. East O'Brien it's called. You get a sense of confidence there. A lot of the inferred is based just on drill hole density. And so as we drill more into these areas, we're going to be hopefully adding resources and also converting in resources into indicated. And you're seeing there the verticality coming through also at that 4.5 gram cutoff. If you were to do a lower cutoff, this would fill in a lot more. But at a 4.5 gram cutoff, you're really focusing on the high grade, and there you're seeing that high grade continuity coming through. And there's the grade. So that's a color scheme based upon grade, same message. There you see the very high grades in the magenta, over 10 grams per ton, and you're seeing the verticality and the continuity on that basis as well. And there you're also seeing some of these targeting blocks that we're now going for. Everything below that graphic is open, and we're specifically targeting the vertical continuity of these trends, these ore shoots as they're going down. So what's the future line in terms of the exploration? Well, there's the whole property. We're open to the east. There's about 700 meters more to go from that resource before you get to the property boundary. There's 1,750 meters to go on the western side, and and that doesn't include any drilling in the old mine. We are currently targeting below the old mine, looking for the continuation of those super high grade mined areas in the old mine. No reason to believe they don't exist. And again, we're drilling currently in some of those gaps. You see P1 shapes there in the resource on the eastern side. Those are priority 1 target areas where we're focusing on sort of infilling within that pattern of resource, in the top few hundred meters of the deposit, and also doing deeper drill holes below these trends. Right now we've got 2 rigs running. 1 rig is doing some of these shallower holes, infilling some of these P1 targets. 1 rig is doing the deeper holes, looking for the vertical depth extent of some of these high grade zones. And we're seeing success with both drills. So that program that's going on is 35,000 meters. This was a recently expanded drill program. This is a press release that came out at the end of May. So about 60 to 70% of that drilling is focused on resource expansion. 30 to 40% is kind of, step out and exploration. And that means we're going deeper into areas where we expect to see the extension of the ore bodies, but it's the more blue sky type drilling. And again, we like what we see. In fact, those 2 drill holes there you're seeing, that's VG in 2 holes which are currently unreleased. So these are from recent drills that we've published the photographs, haven't got the assay data back yet. So our next exploration press release that we hope will be quite soon will be giving you the results from those 2 holes. The one on the right is number 317, and you see the VG circle. The one on the left is a real crackerjack hole, that's 320, and there's a bit of a light kind of reflection there, but you can see the VG. And if I can use my cursor here, I don't know if this is going to work, but you see the VG going all the way through that core on that veinlet right there. I mean, that's as good as good as you get in the Abitibi when you see VG. It's just really good. So again, we expect to have the results from these holes relatively shortly, hopefully, and that will be our next drilling press release. Before I leave the technical stuff from the geology, I do want to talk about this new Albar property. It's about 75 square kilometers of greenfield ground recently added to the company. It's below the old O'Brien mine, below the town of Cadillac. It's in what's called the Pontiac sediments. So these are the rocks that are somewhat, it's the new territory for exploration in the Abitibi, and the thesis is, is there a lower grade bulk tonnage resource in some of those metasedimentary rocks below the breaks? Malarctic, for example, which is 13 million ounces, I think, produced to the stage. That's in a similar setting south of the break to the east of us in Val-d'Or. So we've got 2. This is all relatively new stuff for us, but we've got 2 important vectors that are telling us that those sediments are mineralized. The first one is the top there. That's a section showing drill results. So we were drilling the main Pichier group. This is on trend 4. And this is a recent press release. And we saw mineralization in the Pontiac sediments going towards the main target areas for the main deposit. And we were getting 0.8 grams over 50 meters, 0.7 over 30 meters. So that's the first vector that yes, those sediments are actually hosting mineralization. And there's historical holes that also went through those rocks that weren't assayed. So we're not going to go back and have a look at some of those holes, and those holes are in the lab. The second vector is a till sampling program that was done last year, lit up with a gold anomaly in till to the east, to the west, and sort of northwest of that property. And there's been float samples historically in on that ground as well that have kicked too. So two important vectors here, proof of concept, really more than anything, that there's gold in the Pontiac sediments. Don't know quite what the way forward is on this yet. We're going to plug very few shallow, blue sky holes around some of those till sample results to see if we can hit anything. But right now we're just getting the smoke that there is mineralization at those types of 1 gram or slightly sub 1 gram grades. Nothing yet that's going to take our focus away from the 1 million ounces of high grade material that's at mineable widths in the main break, adjacent to the old mine. That's obviously priority number 1, and exploring that and developing that's number 1. But this is an interesting situation that's developing in these sediments, and let's see what we have there. So what's the news that's going to come from us? Well, I've talked about all the exploration news that's going to come. There's 2 rigs. There's, of that 35,000 meter program, it began at the end of last year. There's 27,000 meters of drilling, still to come into the market. We're drilling below the old historic O'Brien mine. We're drilling within the current resource area. We're also, as I said, drilling on that new Albar target. There's historical assay results to come from these holes that weren't assayed, where we think we've got some reason to now look at that again. So a lot of drilling data, which is going to be coming out on a pretty regular basis for the rest of the year. We're also going to start talking, though, a little bit about the development-related milestones. So there's metallurgical work going on. There has been metallurgical work going on. There's current metallurgical work going on, because I'm telling you a story here about high-grade ore feed surrounded by 5 hungry mills, the metallurgy is really important. And as that story develops, and as we start formulating a business case for how this project is going to go further, knowing things like that is really important to us. So that work is going on professionally and quite quietly and diligently in the background, but we're going to start talking about that. We're also going to start talking about the environmental work that's going on and guiding on permitting timelines and next steps for things. Again, this is not a development story yet. We're not going to rush out and build this mine tomorrow. This is still very much an exploration story, but the exploration is for a purpose. And the purpose is because we see a mine here. And that's important. That's an important distinction. Okay, so I'm going to pass this off to Hubert, who's going to very briefly talk about the balance sheet and shareholding, and also he's going to say a few words in French also to our French shareholders. I have some French. My French is terrible. Je m'excuse, and so I'm going to have to I'll try not to burden anybody with listening to my French, and Hubert is going to come in and take over from here, and I'll come in at the back end.
Thank you, Matt. Thank you. A very good presentation. So my pleasure to take over here. So market cap of the company currently sits at $57 million Canadian. If we deduct the cash position, that was of around $6 million as of June 30th. That's an enterprise value of roughly $50 per ounce in the ground, which is essentially our discovery costs, as you outlined earlier in the presentation, with drilling costs around $150, $170 per meter all in. We currently have 321 million shares outstanding, of which 8% is owned by management and insiders. So we remain committed. We saw Matt coming in. I think he bought more than 1 million shares in the market coming into the company. We have the opportunity of having institutional shareholders in the amount of 24%. So that includes Conwave out of Switzerland, Marshall Precious Metals, US Global, who have been supportive out of Texas for quite some times, and the Quebec Inc., so including the CDPQ CDEX and Desjardins through one of their risk fund. We have the opportunity as well to have a very tight group of shareholders that have been supportive in the area here in Quebec, roughly 35 people that own close to 32% of the company. So we thank you for that. That puts us in a position with a public float of roughly 36%, very tightly held between roughly 55 hands. So we're in a good position on that front. I'd like to say a few words in French to our French speaker, shareholders and stakeholders. So, bonjour à tout le monde. Je vous remercie de vous joindre à nous aujourd'hui. C'est un plaisir de vous accueillir avec un nouveau leadership en place. On avait un très bon leader en Denis Lachance au cours des dernières années avec nous. Et c'est un plaisir pour moi de représenter la continuité pour les prochaines années avec Radisson. Après plus de 10 ans avec Radisson, presque 10 ans maintenant, ça va être un plaisir de travailler avec Matt. Puis je crois qu'on a la bonne personne pour amener Radisson à des niveaux plus élevés et amener la compagnie à un autre niveau et du fait même générer une très bonne valeur pour nos actionnaires et pour la communauté environnante. Donc, je vous remercie tous pour votre présence et votre support.
Thanks, Hubert. And to finish this, I'm just going to leave you, before we open this up for questions, I'm going to leave you with our contact information. You can contact me at any time. So my email is on there, and my phone number is on our press releases as well. Hubert is Chief Financial Officer in Rwanda, always available. Christina Pilon, Manager of Investor Relations, always available as well. So please reach out with any questions at your convenience. And with that, I think, Joanne, we can put this open for the Q&A.
Thank you. Thank you very much, gentlemen. That was a fantastic update. We've got a really nice full room today, and we certainly have lots of Q&A and lots of comments. So we're going to start off with my friend, Mr. Peter Grandich. He says, Matt, one of the many bullish factors for me is that all the mines and mills in operation that are near you, could you put their CEO hats on for a moment and ponder what they will need to see to make a proposal of acquisition? Interesting.
Yeah, well, it's so, you know, thanks, Peter, for the question. I can't speak for anybody else. So, but let's think about the principles of mining in this region. So generally, these mills around us are large. They are processing ore from increasingly difficult to reach places, deeper places, or satellite deposits where ore is being trucked in. So the Doyen mill is taking ore from Westwood and also taking ore from Grand Duc and Poyet to satellite pits further out. The LaRonde mill took the Lapa ore along the highway at about a 7-gram head grade for several years, 100,000 ounces a year. So and is now very deep at LaRonde. The Lamaque mill, that was the Sigma Lamaque project, now the Lamaque project with Eldorado. So if I'm the CEO of these companies, I'm thinking, well, I don't want to close any of these mills and mines. I've already been in the mindset of where can I get ore from farther afield to bring into my mills to keep my mills full and operating. With my permitted tailings facilities that I don't particularly want to reclaim just yet. So looking around, who's got mineable ore in a good location at high grades, right? So I think that's putting this, as you asked me to do, putting the CEO hat on with these companies. That's how I'd be thinking. Again, how that's done. I've said on a previous interview, I think with you, that maybe O'Brien gets developed with a standalone mill, standalone tailings facility. Maybe it gets developed with the ore going to somebody else's mill. How is that achieved? This is honestly, a work in progress. But I see the commercial and business opportunities to make that happen to the benefit of our shareholders. And I think building a standalone mill, standalone tailings facility, and a standalone mining operation, O'Brien, is maybe not the best way to go, right? So there's the building blocks, and the work lies ahead to push that forward.
Excellent. And we do have quite a few questions on the mill scenario. So let's continue on that vein. So one question is, are some mills more appropriate for the O'Brien ore than others in the region? So I guess the next question is there a refractory component to your ore? And I know you were talking about metallurgy, but what is the metallurgy telling you so far?
Yeah, so O'Brien has historically been refractory ore, and the gold is associated with an arsenopyrite association. Again, not unusual for that region. Our metallurgy is actually very similar to the Lapa mine metallurgy, this precedent situation that when it was mined at similar production rates and sent to a nearby mill. So it's important to get this right. Flow sheets of mills are designed and are particular to the ore characteristics that are being mined. So it's a very good question. It's not a simple answer, but lots of precedent where adjustments can be made, separate flow sheets can be built. I think we've looked at gravity and then leach. We've looked at gravity, flotation, and then leach. I think probably what's going to be the right flow sheet for our ore is a gravity, creating a flotation concentrate, and then either marketing that concentrate separately to a refinery that will take it and process it further, or doing a leach or even a pre-leach on that concentrate before you do that, or taking it all the way through the dory and then at the site. When this was done again for the Lapa mine going to LaRonde, a separate flow sheet was created within the LaRonde mill to process the Lapa metallurgy. And so there is wood to chop on working out how that would work. And again, it's a very good question, but it's been done before, and there's nothing here that's particularly unusual or novel about the O'Brien ore, and we certainly want to understand the metallurgical characteristics of our ore as well as we possibly can. And frankly, the audience for that work when we have it all done is not necessarily going to be the investment community. It's going to be the business community as we think about some of these more commercial options.
Okay. One more question on the mill, then we're going to move on. So can you elaborate on what a hypothetical deal with a neighboring mill would look like? So they're asking about economics, typical economics and agreement profile, what your costs would look like, your profit, hypothetically.
I really can't. I think that's probably going too far.
That's what I thought too, but I thought I'd ask the question.
I probably need to sort of remind everyone to reread the forward-looking statement slide at this stage as well, because we're getting into the real hypotheticals and the what ifs. But it could be. It could be. I'll put all the options out there, right? How'd you get our ore into somebody else's mill? Well, somebody could just buy us. That's possible. There's toll milling type arrangements. There's also things that are perhaps more creative, where you're putting different assets together and creating a different sort of business unit or business structure to allow that to happen. So, don't want to handicap any of those options at this stage. Really just coming to this as the new guy, seeing quality ounces that are going to be mined and 5 mills within easy reach. all of which are attached to older projects, which are going into deeper and more difficult to reach places and some of them have self-declared mill capacity and self-declared, interest in seeking new sources of ore. So, light bulb goes on at Radisson in that situation, and there's the makings of a good outcome, and that's probably as much as I can speculate on at this stage.
Okay. Would your ore need a lot of processing before taking it to another mill? That's from a question from me.
No, at this stage, I wouldn't contemplate of any type of pre-concentration or sorting, if that's what the question is referring to. I think look at do the arithmetic. If you had started off with a 10-gram indicated resource, let's say conservatively you dilute that by 50%. We'd hope to do a lot better than that, but let's say 50. If you do the arithmetic on that, you've got a 7-gram head grade, and that's as good as anything in the region going into a mill. So you just truck that, right, and do nothing else to it, I think.
Right. Okay. Interesting. Great. Okay. Next question. How do you plan to optimize costs in the current economic environment, and what measures are you taking to ensure the long-term sustainability of your operations?
Well, cost is location. So from an operating point of view, you've got a workforce that lives at home. You don't have a camp. You've got consumables, lubricants, oil, cement, all available locally. You've got transportation, all available, railheads, paved roads, major highways. So you're not flying in people, you're not shipping things, you're not we're dealing with seasonal winter roads. So that's reflected in our drilling costs. I think we're doing about $150 to $170 per meter drilling, all in.
Yes.
Right.
We have been since 2019 essentially in these costs, and we've had the recent opportunity, Matt, to lock down our contract all the way through 2025 with same pricing. So we're hedged against inflation for the year to come, at least.
Right. So there you go. I mean, that's location, right? If you're up in more remote parts of Canada, you're going to multiple of that, right? So
yeah.
And in CapEx costs, I've lived the life of mine CapEx, right? And the last 3 or 4 years have been very, very tough in that regard. And so that's where this vision of not building a mill and not building a tailings facility. The mill is the single largest and area of highest cost risk in any mining project, because the amount of engineering, you've got the electrical and instrumentation, you've got your detail engineering, you've got your flow sheet as a source of your delays and your ramp up issues. So if you don't have a mill, you're avoiding all of that. If you don't have a tailings facility, you're avoiding all the major earthworks in a mine, which is also a big source of cost risk, right? So what O'Brien as a mining operation might end up just being is an underground mine, a ramp, underground mine development. Maybe you rehabilitate the old O'Brien shaft to a kilometer down, and you use it for vertical conveying of your ore to the surface. No head frame required. You're just using a vertical conveyor, which is a much more kind of easier thing to do. Relatively minor. You got your equipment fleet underground workshop. You maybe got some mine dry. You've got water treatment facility at surface, and you've got maybe some trailers for offices, and that's it, right? That's low impact, not a big footprint, and you're transporting the ore somewhere else. So that is the best way to control mine capex, is to not be building things like the detailed mill type, all the detail engineering and detailed specs and multiple trades you've got that are balanced within the construction of a mill. You're not dealing with that. You're not dealing with the earthworks risks of a tailings facility. Again, all very speculative and hypothetical, but we're so laying the building blocks out in front of us here as to what a mining operation at O'Brien might look like, and that's what it might look like.
Wow, that's great. And if you've got plenty of mills around you with excess capacity, it just makes sense to strike a deal and use that capacity to your advantage. All right, so we're getting a lot of questions on the share price. So I'm going to roll them up into one question, which is basically, in your opinion, what is hindering the company valuation in the market, and what are your plans to address it?
Yeah, again, I've learned through experience in this business that you can't be a pundit on your own share price too much, because shareholders buy and shareholders sell very much on their own their own rationales. So this is a company that's been around for a while. We've got over 300 million shares outstanding. There's a lot of long-standing and patient shareholders there. And really, with Hubert kind of, very much as my guide, I'm beginning to understand our shareholders and meet our shareholders. I think what I'd like to see is more liquidity in the share price, and really that's just telling the story to as many people as you can: individual shareholders, high net worth individuals, institutional shareholders. And I think liquidity is something that I think everybody would want to see, and that'll help with share price gains. I mean, certainly, as Hubert said, we're trading at our discovery cost, right? So all of this optimism and all of this future mining talk, none of that's in our share price, right? That we're really just trading at the cost of finding those million ounces right now. So there's the investment opportunity. I think what's really important in our shareholding, and Hubert pointed this out, about 35% of our shareholding are mostly high net worth individuals in the Abitibi region, around the Rando of Albar, who know the O'Brien project and know Radisson. Some of them have been shareholders for many years. They're very supportive. They're high net worth individuals. They're sophisticated investors. They're maybe involved in the mining industry already, and other parts of the regional economy. And they want to see O'Brien as an operating mine. And it's a fantastic advantage to us to have such a large group of shareholders, 35% of the total, that are in that category. Very much aligned with the company, right, and long term and supportive. But I think broadening the shareholder base is going to be the objective here, and getting out with the message that this is real, professional, quality, well located stories. I think people are probably used to Radisson as being a company that raises a little bit of flow through every year, does some drilling, adds some ounces, and then kind of rinse and repeat. I think my message is that we've now crossed the threshold where we have something here, right? That we have something here that it can go to the next level, and the job now is to see that happen. Again, we're not rushing out tomorrow. You're not going to see some big deal to build a mine tomorrow. I mean, that's not what we're talking about here. This is still an exploration company drilling and adding ounces. But I think people have to hear the message that it's real. There's lots of deposits out there. Maybe they're probably bigger than Radisson in terms of ounces, 2, 3, 4 million ounces. 0.8, 1 gram per ton material. Big open pits. They work on paper. They'll have studies that show rates of return, but they're sitting in single asset companies, maybe in locations that require infrastructure and bigger capexes, And those types of projects, are exceptionally challenging to develop in this current market. There just isn't the risk investment appetite out there for those types of projects. I think it's a prejudicial view, maybe, but and which is unfortunate, but that's the market's not kind of interested in financing those types of projects. Radisson is different, right? Radisson is 10 grams per ton, 10, 15 minutes drive away from mills, right? On a brownfield site, open and growing, right? So that's real. That does get mined, and it does get developed, and it does get invested in, right? And it's my job to tell that story.
So, as an operational guy, what drew you to Radisson, a gold exploration company?
Well, all of the above, everything I've been saying, right?
Exactly.
I'm not the type of person you hire just to do exploration for exploration's sake, right? I'm not a natural explorer, right? My track record, for good or for ill, has been actually developing projects, right? So I have to see the light at the end of the tunnel. I have to see, okay, this is actually going to be a mine, right? I'm not there just to have fun, with over the next 10 years, running exploration. So that's what attracted me to Radisson, right? And it's, I'll be honest, it's the smallest company I've worked for as CEO in terms of market cap. Well, since probably my first job as CEO, which was running an Ego subsidiary called Contact Diamond back in the early 2000s. It's a compelling business opportunity for me, yes. Right? And that's why I took the job. I also took the job, by the way, because I knew a lot of the directors already. Michael Gentili had been a shareholder of Gold, and Pierre Baudouin, somebody with terrific reputation, not just in Detour Gold, but building the cheapest project for Silvercrest, which has been a big success. Jeff Swinoga I knew previously as well. So business is people, and I was attracted by that. I have to say, Denis Lachance, former CEO and interim chairman, has been terrific. He's retired now and stepped off the board and stepped away as CEO, but he's been terrific to me personally in transitioning and bringing me up to speed. So very happy ship, and good board, good team, a small team, but very good quality work that's been done. So all of that's very positive, and but for me, it's the compelling business opportunity here.
Excellent. So let's talk a little bit about the permitting. What permits actually remain, and what are the typical timeframes for them on the project? Yeah,
I'll talk a little bit of this, and I'll maybe pass this off to Hubert as well. We're fully permitted for all the drilling we're doing, number one. And we're also permitted to, and we have been for some time, to go underground and with a ramp and do a bulk sample. So that's a significant permit, because as I described the vision for what this mining might be, the principal infrastructure here that we'd be developing would be a ramp and an underground mine. So we're already permitted to do that for exploration purposes, to take a bulk sample, which is something we'd want to do before we started mining. No plans immediately to do that, but looking to see what the path would be to actually do that work, right? It's an important step for us, right? Thereafter, you're dealing with, we're not talking about a large project here in terms of volume of ore. I mean, we're talking about something that'd be 1,000 or 1,250 tons a day as an underground mine. So we're not, and if we can do it without a mill, without a tailings facility, our impacts would be less than they would be otherwise. Every mine has impacts, and every regulatory regime has to assess those impacts, large or small, but we'd probably be on the smaller end of the scale. I think we want to be honest, I'm really just at the stage of trying to understand what that path is and what it looks like and what the regulatory path would be. I've done it before in Quebec. The Renard mine was quite a major undertaking in terms of environmental assessment, federally and provincially. We went through the COMEX process in Quebec, but we went through it very well. Actually, it was less than a year for us to go through the full environmental assessment and to get our certificate of authorization in Quebec. So, and that was because we had everything well set up before we started the process. So really just understanding what that would be for this operation, but in principle, yeah, you know, fully permitted for everything we're doing right now and everything we want to do in the immediate future. And contemplating what a mining scenario might look like and what then the regulatory path would be. But I'm again, best jurisdiction in the world for developing a resource business because it's the most predictable process in the world. And you're dealing with regulators in Quebec. You're dealing with knowledgeable people who are experienced and you know, and well resourced, right? And that's the key. Hubert, anything you want to add to that?
No, I think you're about right, Matt. The permits we hold for the bulk sampling, it's about to see, you know, how that exploration program fits into a future mine plan and the studies that we need to upgrade to obtain those permits into the future mine. So I think you covered it all.
Okay, gentlemen, we are at the top of the hour. So we're going to have to wrap it up. There are a few outstanding questions, and we will get those over to Christina, who can respond to any outstanding questions that we still have. Before we sign off, Matt and Hubert, would you like to say, are there a few words that you'd like to say to your shareholders and potential shareholders who are online with us today?
You know, stay tuned. Hopefully this was useful as a bit of a reintroduction to Radisson. If you've known the story before, this is a real situation. We're endeavoring to do a real and professional job to take it to the next level. You know, stay tuned, really, I think is the message. And Hubert, I'll ask you to say something as well.
Yes, Matt. Well, it's been a pleasure, you know, welcoming Matt to the company. We are only getting started into touring the company with existing shareholders and potential new ones. And I have to say, I've been very impressed. So it's going to be an exciting opportunity for us moving forward. And again, we're trading at a discovery cost right now. So it's a very compelling opportunity.
Thank you, gentlemen, for your time today. This presentation will be available on the Radisson website and across all of VID's social platforms. Before you sign off, if you could please ensure that you fill in a very quick questionnaire at the end of today's presentation. This really helps us and the company communicate more effectively with you for future events. Thanks and merci to everyone for tuning in. We look forward to seeing you on the next VID Town Hall Forum. Goodbye for now.